So whether you're a first-time home buyer or you're looking to buy your next home, yes, it is possible to buy a home using a home equity line of credit, also known as a HELOC. Now, you may have heard of this as a rumor that you could buy a home using a HELOC, or this concept might be completely foreign to you and you just found this video on YouTube and you were curious. So here in this video, I'm gonna go and completely break down the concept of buying a home using a HELOC. What is the process like? What's the qualifications, some pros and cons, as well as some pitfalls to avoid in the process if this is something that you want to look into. What's going on, everybody? This is Sam Kwok here, one half of the Kwok Brothers, real estate investor and an entrepreneur. And if you're new to our channel, we love to talk about making money, keeping more of it, and how do we secure our financial future. This concept of buying a home using a HELOC is known as a purchase money HELOC, or simply a purchase first lien position HELOC. Now, from an overview, the way this works is essentially you're buying a home just like you would buy a home using a mortgage. So instead of using a conventional loan, FHA, VA loan, you would just go and get a HELOC, a first lien position HELOC, to buy a home. Now, do all banks offer this? No. There are certain banks that will offer this purchase HELOC specifically, which we'll get into towards the end of the video, so definitely stick around to the end. And let me take a step back real quick and explain what even is a HELOC, a home equity line of credit. Now, think of a HELOC as a giant credit card that is using your home equity as collateral. And the key difference between a mortgage and a HELOC is that with a mortgage, it's known as closed-ended loan, meaning when you make payments to your mortgage, the principal and interest, you can't borrow the principal portion back out just like you would with a credit card, right? So with a credit card, you will borrow, pay it back, and borrow again over and over again, which is known as a revolving line of credit, which is exactly what a HELOC is. A HELOC, a home equity line of credit, is a revolving line of credit, which whenever you borrow money from the HELOC and pay back the principal portion, you're able to borrow that principal portion again for really whatever you like to do, as long as it's, of course, financially healthy to do so. So say you start out with a $300,000 HELOC balance, and let's say you pay down $100,000 principal balance on the HELOC, you're able to borrow $100,000 again at any given point in time, as long as you're within the draw period of the HELOC, and you're basically able to access that without having to refinance or fill out another paperwork. You just pretty much go on your online banking and transfer the money over to your checking account. So just like how I'm explaining it, the pro obviously is that it gives you flexibility. It allows you to tap into your equity whenever you want to. You don't have to go to the bank again to fill out an application or do a credit check. So if you have a situation where you need the money out for a kitchen remodel, or you need to redo your roof, or you need some money to do a major renovation, then yeah, using the HELOC, you can draw the equity portion out of your home pretty much at any time you want, as long as you're within the draw period. Now, the con is if you get carried away and if you're not careful about how you're using the HELOC, then yes, you can potentially run into some trouble and danger of maxing out your line of credit for misuse or abuse of that HELOC. So you just gotta be careful with it. So those are the main pros and cons in terms of the purchase HELOCs. Now, by interest rates, I know some of you guys might be asking for this. When it comes to the interest rates on the first lien HELOC, it's very comparable to what the going rate is for a conventional traditional mortgage. And I know a lot of people might be saying, well, Sam, it's a HELOC, wouldn't the interest rates be higher? Well, the reason why the interest rates are not as high as what you might be thinking, which is the second lien HELOC, is because this is a first lien position loan. Now, I won't get into the depth of first lien versus second lien. All it means is that if it's in a first lien position, the banks have less of a risk with a first lien mortgage or HELOC. In case you file a foreclosure or bankruptcy, the banks will at least get some money back. Whereas a second lien position loan, mortgage or HELOC, the banks have less of a chance that they'll get their money back in case you do become insolvent, which in this case will be bankruptcy or foreclosure. So I don't mean to give you a long-winded answer, but just to give you an idea, the first lien HELOC interest rates are pretty darn comparable to your traditional 30-year mortgage. So aside from drawing money out for renovations or repairs along the way for your home, there is also a way to use the first lien position HELOC to pay off your entire debt on the first lien HELOC in as early as 5 to 7 years. Now for that, I'll have a separate video down below for you where you can pay off your mortgage, or in this case, your first lien position HELOC within 5 to 7 years, so you can be debt-free, mortgage-free within 5 to 7 years. I'll leave that link below in the video description for you. Okay, so let's go and talk about the process of getting a first lien position HELOC. Now, it's not that different versus getting a traditional mortgage. You essentially talk to a bank that offers a first lien HELOC and you do what's called the pre-approval process. Now, during the pre-approval process, you're gonna be submitting documents like your tax returns, they'll check your credit, they'll want pay stubs, all the basic financial documentations like your financial statement. I mean, it's a pretty typical process as if you were to go get a mortgage. Yes, there is an underwriting process and a full appraisal that might be needed, especially if it's a first lien position HELOC. So when I got my first lien position HELOC, actually with one of my rental properties, they wanted my tax returns, they wanted to see my credit, they wanted to see the income on the rental property because this is a rental property, but they also wanted to get a full-blown appraisal. So I actually have to schedule an appraiser to come out, look at the property, and get a full-blown appraisal on the property. So that process took maybe about a month to fully get underwritten, to get approved, and I was clear to close about a week or two after being approved. So again, pretty typical, but if you're buying using a first lien HELOC, you would essentially go through the same process, get what's called a pre-approval letter, which tells you, hey, based on your debt to income ratio, based on your income, based on your credit, we believe that we can fund you, we can lend you up to X amount of dollars, so that what you would do with that pre-approval letter is that you would essentially look for homes that would fit within that purchase price or the maximum lending amount that the banks are willing to give you for the first lien position HELOCs. And I know a lot of my realtor friends will agree with this, is that if you're gonna look for homes, a lot of real estate agents will want to at least see a pre-approval letter. So that way you're not shopping for properties or homes, not having a plan for how you're gonna actually fund and pay for the home. So a pre-approval letter is gonna help you regardless, and it's part of the steps of buying a home using a first lien position HELOC. Now, as far as qualification goes, these are subject to change when I explain it to you guys, depending on what the banks are doing. Again, stick around to the end because I'll show you how you can tap into some of these banks. But number one is a lot of these banks will ask for at least 10% down. So 90% loan to value. That's the maximum loan amount that they're willing to lend against the value of the property. So expect 10% down on the purchase price when it comes to the first lien HELOC. The second thing is 700 FICO score, 700 credit score, right? They're gonna wanna see that. Most banks will want to see that as a minimum requirement. And then the last really big thing is the DTI, debt to income ratio. That's simply for the banks to see how much debt payments do you have against your income. So if you're making $10,000 a month and your total debt payment with credit cards, auto loans, whatever, is $2,000 a month, that means you have 20% debt to income ratio. Most banks, whether you're getting a traditional 30-year mortgage or a purchase HELOC, a first lien purchase HELOC, they're gonna wanna see that below 42 to 45%. So they don't wanna see more than half of your income going towards paying down debt. That's not a good situation to be in. So 42, 45%, less than that is good. 700 FICO score, and most banks are gonna ask for 10% down for the purchase HELOC. Okay, now let's go and talk about the closing process. Now, again, very similar to a traditional 30-year mortgage. If you've never done a closing, that's okay. I'll kind of walk you through how that works. It's basically the banks will give you a clear to close, which is happy news for everybody. So you'll go to a title company or a lawyer's office, an attorney's office, and the banks are gonna send a bunch of paperwork for you to sign, right? There's disclosures and Truth in Lending Act and all kinds of things. Basically, the bank that's giving you the first lien HELOC will fund the purchase. So on your settlement statement, it will show you that such and such bank is funding X amount of dollars for your purchase, and you're bringing 10% down, whether that be certified check or wire, whatever the case might be. So again, it's very similar. The total closing process shouldn't take you more than an hour or two, depending on any nuance when it comes to title or the property. It can vary. So that is the closing process. Again, not that different at all with a 30-year mortgage closing. So that process is the same. So really, the only difference with a 30-year mortgage versus a purchase HELOC process really is just imagine you're buying a home with a mortgage, but you're just getting a HELOC instead. That's really the difference. So that's the process. So yes, it is possible to buy a home using a first lien HELOC, whether that be for your residence, primary residence, or your rental property, which with rental properties, the down payment is going to be higher. I think it's 25% down for rental properties. So do note that just as an FYI information for you. Okay, so how do you get in touch with these banks? Now, the reason why I haven't mentioned any names is because they kind of come and go. Because if I say one name, they might not offer the first lien HELOC anymore by the time you're watching this video months from now. So if you want to get in touch with us, we can kind of help you with that process. I'm going to leave a link down below where you can go and schedule a call with us. And that's part of showing you how to use the first lien position purchase HELOC to pay off faster, accelerate towards having no debt on your home. So that's part of that process for you. But let our team know, hey, I'm interested in buying a home using a first lien HELOC and also being able to pay it off as soon as possible. So I'll leave that link down below in the video description. For anything that I missed, go and please leave in the comments, ask the questions. I'd be more than happy to answer, which by the way, just FYI, I'm not a banker. I'm not a loan officer. I happen to be a guy on YouTube that teaches you how to pay off your mortgage faster, also investing and how to grow your wealth through real estate. So if you enjoyed this content, if you loved what you got in terms of information, please subscribe and leave a like in this video if you want to see more like it. And then YouTube thinks this video right here is something that you might be interested in. So click on that video and we will see you in that video. Take care.